Good morning, traders. It is 8:01 a.m. Um, on Tuesday, the 9th of June, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Much of the news overnight is concentrated on Europe again and the dilemma that is continuing with Greece. The Nikkei has had its biggest daily loss since late April. Also, HSBC announced that it will be cutting 25,000 jobs to cut approximately 5 billion euros or $5.6 billion in costs, causing a downdraft in Asia, which continued into Europe. We'll look at Europe in a second. Um, the EU is unhappy with the latest Greece reform proposals. They're saying that essentially the Greeks are just regurgitating the same things as before. Creditors are skeptical that Greece can come to any agreement, any agreeable solution at all. Not a good review of the performance so far of Tsipras' attempts. Uh, and then finally, the S&P fair value is at negative 1.2. We're getting close to parity as the June contract comes to a close, which brings me to a reminder that on Thursday at 8:30 a.m. Central Time, we officially start trading the September contract. I know a lot of people don't roll their contracts forward until volume shifts on Friday, but I go with the official rollover. My data changes over to September, and I redo my charts and everything on Thursday morning. So Thursday and onwards, you'll be hearing me quote the September contract as far as prices. Today on the calendar, we have at 9 o'clock, we have U.S. wholesale inventories, 0.2%. That's 9 Central, 10 Eastern. All times are Central. Looking for wholesale trade sales at 0.6%, and an aftermarket today at 3:35, 20 minutes after the pit closes in the S&P. We have the API crude inventories, which, by the way, is expected to tomorrow's inventory numbers are supposed to show the sixth, I believe, drawdown in a row, and that's why you're seeing prices on gas at the pump increasing. Looking at speakers, at 9 o'clock, ECB Supervisory Council's head Nui speaks at a conference in Berlin, and at 11 o'clock, IFO's President Sin speaks at the International Press Center in Brussels. Other than that, we have a 10:30 4-week T-bill auction and a noon 24 billion 3-year note auction, and that's pretty much all the event risk for the day. Let's look at yesterday. Yesterday, the expectation that I left you with on the trader bite was that we would likely just bounce around within Friday's range, potentially pushing to 2099.75, and if there's any power from the buyers, then we're looking for 2101.50. None of that happened. Hypo 1 was completely off yesterday. The market could not even take Friday's close, which was at 2092.25. It stopped a tick short, and it moved back through the mid and just sat at the bottom of the profile for pretty much the entire morning before it finally broke through. The target on a breakthrough lower was 2083, that key monthly LVN number. I posted an image of that on Twitter to show where that comes from. Here it is. So you can see these are monthly profiles here, and you can see it in February as being the HVN, March another HVN, April an LVN, and in May an HVN. and now we're trading it in June, and this is the area between 2082 and 2084, 2083 being the key figure in the area. So it's it's an important price that we've tested and retested. Here it is again. You could see it was key in February. And April, there's an HVN. It just seems like early in the month we come down here and test the 2083. We've tested 2083 the last couple months. And then, of course, in April, we went ahead and traded below it and built a nice big high volume node beneath it. And we're in that area today. The LVN from April goes all the way down to 2065. The overnight low is 2068, with 2062 being the low volume node in this area. So overall, it did not perform as expected. It tested lower, and even though it did, I was still looking for, okay, push to 2083, and then there was a fair amount of support underneath here, and it just kept squeezing and squeezing and squeezing, and it actually pushed much lower than expected, putting in this impulsive move. The return to the mid and IB low looked decent for a short, but there was the point of control behind it, and it's back in the prior day's range, and I expected some decent support here, so I did not look for the short here, although the short would have played out for 10 points. Overall, just an incredibly slow trade yesterday, but it did, overall, the market did trade with volume in line with the 20-day median. Volume was exactly in line with the point of control, or the expected volume for the session. You can see here we traded 1.06 million, and the most common daily volume on the pit session is about 1 million contracts. Again, the range is also well in line, so nothing special about this sell-off. The sell-off, to me, watching it yesterday, seems very slow, calculated, cautious. It is not a frenzied sell-off. So overall, I think that the market's just doing a good job seeking out sellers, seeking out buyers by advertising lower prices. Overall, nothing has changed in the big picture, and the expectation is that it would turn back up and resume the process of taking back 2101.50. I was on daytradingradio.com yesterday on my weekly update, and that's really the expectation. I did expect it to pull back down here into this 2094 area, 2083 area, but here I'm really looking for a base in this area. So I think shorts, longer term shorts, might consider taking something off or hedging their position a little bit. I do expect a bounce from here, not sure when, and there's not too much on the calendar that would spur a quick reevaluation unless something comes in through the news feed. So my hypothesis for today, let's take a quick look at the overnight session. Here's what we've got on the 15-minute overnight session: completely dead Asian session as always, and then the European session comes in and sells off at about 13 points lower, but we've taken back a ton of this. The profile overnight showing us that there's no consensus on price at all. We're back inside of yesterday's range right at the low, and heading towards yesterday's close. Overnight inventory is still short, so the expectation is for it to adjust up as we come in. Let's take a quick look at what's expected for today. Again, I'm expecting it to battle its way back up to 2083. There's a fair amount of resistance now above. If it breaks through the 83, then the bulls have a good chance for a run at 2099 and 2101.50. Otherwise, I think we're likely to get stuck. If we cannot find buyers still, and we still have to advertise lower and lower prices, then the next stop is likely to be 2062.75. That's the next big area. And if we look back in time at our big picture, 2062 puts us right where we were in the middle of March. So overall, we're still in this crazy long-term sideways chop balancing zone that we've been in since February. And we're still far from that big 2019 quarter, this big area that has not been tested yet. Maybe we're heading there. I don't know, but it just seems like as it's moving down, we're not seeing the spike in volume, the spike in range. We're not seeing a frenzied sell-off. We're seeing more of a calculated, slow process. I'm also seeing accumulation on the tape. If you look at this rotation up yesterday, pretty impulsive push up. You can see that there was a fair amount of buying on the delta on the way up. So it's to me, the long-term traders, the long-term players in here are likely to be accumulating their positions at these lower prices, which is where support comes from. So that's my primary hypothesis: a push, an attempt higher, butting its head against the 2083 area. I expect that to be resistance on the first go. I expect it to rotate down. If it cannot find enough buyers to push through, then I'm looking for 2062.75 for today. That's the way that things are shaping up. A quick scan of the market. Quick scan of the market. You can see here, this is the DAX. The DAX, as soon as it opened, as soon as the cash opened here, it went into a selling mode. It is back at its mid for the session, but just to put things in perspective for you, the DAX selling from 11,072 down to 10,861 is worth approximately $5,600 per contract on that range. That's how big this move is. With charts, playing with the scale, making things look very small. But there's a fair amount of selling on the European markets. The Euro stocks has dropped. I spoke about the Euro stocks likely testing lower soon. That Euro stocks has dropped to the next big MC point of control. It pushed through by 4 ticks and has bounced up again. But Europe is definitely turning down. Let's take a quick look at the euro. The euro is making some interesting moves. It did have a run up last week, and it took some of it back, but essentially the euro has built a high volume node, a double distribution profile high volume node in this 111, 112.70 area, and has pushed back down to its point of control at 111.22, and I believe that it's likely that it's going to come back to this 11.22 to test yet again. So the euro showing some strength against the dollar, but overall it is also imbalanced. The market's just sitting sideways. It looks like some are trading already. I want to switch gears real quick here. I'm up on my 15 minutes, and I just wanted to talk about failure. It's a subject that I brought up a couple weeks ago. Key elements I want to emphasize here when it comes to trading is that we are pre-programmed to avoid experiencing failure, which works against us in trading. It's really important to be quick to take your failures, to plan for them. This is why we have risk limits and set risk limits on our trades. Failures are going to happen. Failures are the same thing as a no. And a lot of us are brought up not liking the word no since we were kids. But in trading, a no just means it's not ready, you're too early, or you're not going to be successful in this way. Do not avoid failures. Avoiding failures causes all kinds of emotional distress, and it results in some really odd behavior when really the reaction that you need, that the reaction that is favorable to you, is to just let go of the trade, reset to flat, reassess, and then try again. Just because you hit an obstacle on the way does not end it. Just because this is a mathematical kind of puzzle that we trade in, uh, does not mean that perfection is what you seek. Do not seek perfection in trading. Perfection in trading is another way to pressure yourself into not letting go of your failures, or accepting your failures quickly. It's a lot like someone who says, I'm going to lose weight and it's going to be linear, and I'm not going to eat every day, and I'm only going to eat salads, and I'm only going to do this, that, and the other thing. And what happens as soon as you are in a situation where you break that perfect system, you basically throw it out, and then you throw caution to the wind, and then you just basically stuff yourself. You don't want that. What you want to do is plan to have a setback every once in a while. In general, in my entire career, um, I've had failures, and I plan for them. In general, I will hit my loss limit for the day once or twice a month. It's expected. I know it's coming. It's in the cards. So when it's happening, there's no anxiety. It's just that day. I start to get worried when I get 4, 5, or 6. It tells me that something's really changed in the market and I'm not in alignment with it. But that's all it means. It doesn't mean that I'm worthless. It doesn't speak to my ego or anything like that. Just plan for failure. A lot of a lot of the things that I see traders doing wrong through stage 5 and watching people trade live and getting risk alerts and stuff, it is just people doing their best to avoid being told that they're failing that day. Failing is not a bad thing. It has a lot of lessons in it. It tells you where adjustments are needed, and it helps you reset. So take it as part of nature. You have to pull an arrow back before it shoots forward. You cannot shoot an arrow forward without pulling it back, and the pullback is just a natural part of the process, and it's a required part of the process as far as I'm concerned in order to propel you forward. So plan for bad days. Plan for the fact that you're going to get angry, you're going to get frustrated, and so on, and know that the worst reaction to failure is to just ignore it, or avoidance. Just accept it for what it is, stick to your plan, and the goal here is consistency. Failure is part of consistency. Those two do not occur without each other, in my opinion. Good luck today, and I'll catch you tomorrow. Take care.